So what I'm going to go over today is all the setups that took place last week, starting from Monday and going into Friday. And obviously last week was quite a volatile week because, we did have non-farm payroll at the end of the week and FOMC as well. So it was quite an interesting week, and there was actually quite a lot of setups last week, which I'm going to go over. So we're going to start off with Monday, the 1st of May. And then from Monday, the 1st of May, I'm just going to make my way down from there up until Friday. Okay. So just starting with the daily time frame, we can see that on Monday, right, the next draw on buy side liquidity was this initial swing high right here. So I'm just going to label that as such. Daily buy side target. And the next draw on sell side, so again, just going to get rid of this, but the next draw on sell side going into Monday was the swing low down here. Right, so if we go down to the 4-hour time frame, what we can see is, so again, I'm just going to forward play this just before the open of the session. The next draw on buy side on the 4-hour is the swing guy right here. I'm just going to get rid of this line. And the next draw on sell side liquidity on the 4-hour was this imbalance just before the start of the session. So just going to label it as such. Right, so now that that's that, just going to go over to the 1-hour time frame. So on the 1-hour time frame, I'm just going to adjust these lines just before the open of the European session. So just before the European Open, the next draw on buy side liquidity is, so 1 second. So next draw on buy side is the swing high right here. Right. And the next draw on sell side liquidity, so I'm just going to get rid of these other lines, is this imbalance right here. So again, it's very important to always differentiate the 1-hour imbalance and sell side target from the 4-hour imbalance and sell side target. Okay. So that's that. Now going into the 15th time frame, we can see that. Okay, so just before the open, we have a clearly defined Asian range right here. Okay, so I have a very clearly defined Asian range with this being the high of the range and this being the low of the range. We can see the price railway track back into the range and then trapped below the range. So price is just trapping above and below the range, right? So just before the London Open, what we can see is that price has given us a bearish break outside of the range. So although price gave a railway track, that railway track didn't close back into the range, making this a bearish break outside of the Asian range. So in light of this, the most optimal setup to have traded was a break retest continuation to the downside. So with a break retest continuation, of course, you would have needed to wait for price to break outside of the range, retest the order block, and from the order block, trade a continuation to the downside. So essentially going into the London Open, what we were looking for was for price to have retested the bearish order block, which it did. So I'm just going to replay this for you. Right, so price obviously traded right into the bearish order block, retested the bearish order block, and then gave us a break of market structure to the downside. And then after that, price obviously gave a retest of the breaker. So I'm just going to label this. So this is a break of market structure. Right, and the stop goes 5 pips above the high. Okay, and then after that, of course, once price obviously gives a breakout of structure, that creates a breakout. So our interest is to enter at the midpoint. So we can see the next candle would have immediately triggered you in. So that's why with these kind of opportunities, you want to have your positions ready just before the close of the candle, just in case it's a very quick move into the area of interest. And then obviously stop goes 5 pips above the high. Now, for me, in this case, the most optimal area to have taken profit. So if you just go down to the 5 minutes time frame, right, what we're looking for is number one, we're looking for where the 800 EMA is. So we go to the 15, we can see the 800 is down here. So the next drawn liquidity obviously would be the low of the low of the H1 sell side target. So that was the first target for this setup. And then the second was the 800 EMA on the 5 minutes time frame. Okay, so just like this. Right, so the first target was a 1 to 3, and to the second target was a 1 to 5. So essentially, obviously, after that trigger, price eventually gave a continuation away from and then hit the first target at the low of the 1 hour range before eventually obviously accumulating and then giving us a bullish reversal. So although price didn't hit the second target, the first target was hit during the London Open at the low of the 1 hour range for a 1 to 3. And then after that, obviously price gave us a reversal back into the order block to retest the order block in the New York Open before trading back down into the 800 EMA. So that was Monday's setup. So setting the first target at a very accurate level would have been key to have taken profit within this specific trade. Right, so let's go into Tuesday. So going into Tuesday, I'm just going to adjust those daily levels. We can see that the next draw on daily buy side liquidity is going to be the swing guy right here. And the next draw on daily sell side is the swing low down here. If we go down to the 4 hour time frame, we can see that the next draw, so just to forward play this into the 1 a.m., we can see that the next draw on the 4 hour buy side target is going to be this imbalance. Actually, no, price, yeah, no. So there was a bit of that imbalance that wasn't filled. So that part of the imbalance would be the next draw on buy side liquidity. And the next draw on sell side is going to be the swing low down here. Okay, so that's that. Right, so that's for the 4 hours. So going into the 1 hour time frame, I'm just going to just forward play this. The next draw on buy side is going to be the swing guy right here. So it's pretty much where the 4 hour draw liquidity is. And the next draw on sell side is going to be the swing low down here. Actually, no, rather it will be the swing low down here, considering this candle didn't trade below H1 sell side target. Right, so that's that. Now going into the 15 minutes time frame, right? So it's a very interesting structure because what we can see here is obviously we have a clearly defined Asian range. Price has already traded above the high of the Asian range. So we've had a bullish break in Asia. Price retested in the European Open. So let's take a look and see what happened just before the London Open. So just before the London Open, we're anticipating price to essentially take out the high of the range. So it's a break, retest, and then we can anticipate a reversal to the downside. However, what we can see is that price had essentially given us a bearish move to the downside. Now, the best way to interpret this, now, it's easy for this to confuse you, but in a case where price fails to take out the high of the range before breaking to the downside, what do we call this? Well, we call this a reversal, right? But we call this either a 5 minutes or a 15 minutes reversal. But in this case, because the break of market structure didn't happen on the 5 minutes after price created this initial high, it happened on the 15 minutes right? So this is the initial high, price contracted, then delivered a lower high, and then broke below, leaving this imbalance, right? This becomes a 15 minutes break retest reversal. So obviously our area of interest is to enter at the 15-minute imbalance. And there's one of two ways you can do this. You can either A, just place a pen in order at the imbalance and then stop goes above the high. Or B, the way that I personally prefer to do it is I wait for price to trade into the imbalance and to give me a 1 minute break of market structure. So here's what we can see. So I can see here that price obviously traded quite close to the imbalance, gave a break of market structure right here. Right, so this is a break of market structure. And then purge the recent high, which obviously then coincided with that AOI interest, which is that imbalance. Now, what I like to do in this case is, because of course, with this break of market structure, your area of interest is to enter at the breakup, but you wouldn't have because there's this imbalance there. But considering prices purged the recent high and traded back into the range, the best way to enter this is either a market execution. So the moment price trades back into the range, you can enter with a market order, or you could enter with a pending order, right? But ideally, you want to enter somewhere in this area. Stop loss going 5 pips above the high. All right, so place a short position. Price closes back into the range. Stop loss 5 pips above the high. And then the first profit target. So I'm just going to zone out so you can see this clear. Now, usually, again, I'll look at the recent low that was created. If I can get a 122 to the recent low, that should be the first profit target. So just label this recent low. So recent low should be your first profit target. You can get a 122 to there. And then the second profit target. Now, so just going to just again go to the 15 minutes. I'm going to be looking at where the 800 EMAs are residing. I can see that there's a short-term low down there, which is a nice area to, because remember, we're already below the H4 sell side, we're already below the H1 sell side. So at this point, what we're looking for is lower targets that price could be aiming for. I also like to look at, where the 800 EMA is on the 5 minutes, on the 1 minute, right? So I can see price is already below the 800 on the 15 minutes, right? I can see price is already traded into the 800, and on the 1 hour, again, I just want to see where price is in relation to the 800, right? So again, so if, for example, there isn't any, the 800 isn't near anything else for me, the next most reasonable profit target would be the next low. So therefore, so if I just go back to the 15 minutes time frame, so it's a 5 minutes time frame, right? My second profit target would be at this short-term low down here, okay? So that short-term low, by the way, is also yesterday's low. So this is, so this is all, last week's low. So this is the low of Friday. So again, it's very important, right? These weekly lows, daily highs, daily lows, these are also draws on liquidity. So now that we have all these lows in mind, we've seen where the next low is on the weekly time frame. That's the second profit target, with the first profit target being a recent low. What we can see here is that price obviously traded down and proceeded to hit the first profit target, and then proceeded to give us, and then contracted before eventually trading, well, traded back up and then accumulated for a bit, and then price gave a bearish continuation just around New York Open, and gave us a second TP hit. So this is the setup that took place on Tuesday. Okay, so Tuesday was a 15 minutes break retest reversal with a 15 minutes entry at the imbalance, because we got a secondary break of market structure. Okay, right, so going into Wednesday now. So going into Wednesday, again, those levels are pretty much the same. We have the next one buy side up here. and the next on sell side down here. If we go down to the 4-hour time frame, what I can see is, okay, so just forward play this to the 1 a.m. candle. We can see the next drawn buy side liquidity is the swing low down here. On sell side liquidity is the swing low down here, and the next drawn buy side liquidity is the swing high up here. So I'm just going to label these accordingly. Just going to get rid of this as well because it's not needed anymore. I'll also getting rid of this as well. All right, so it's the next. So this is now our 4-hour range. So we're going on to the 1-hour time frame. So again, that's the 2 a.m. candle, and then go to the 3 a.m. candle. All right, so again, just forward play that. H1 sell side target is going to be the swing low down here. And H1 buy side target is going to be this swing high right here. So just going to take this back. Also, we have equal highs, something to be aware of. Okay, so this is a very defined range. Now, if we go down to the 15 minutes time frame, now the question is, okay, what can we see on the 15 minutes time frame? Well, I can see a very defined Asian range, right? So again, you have to just identify those 3 points. You have point A, point B, point C, back down to the low. Going into the European Open, so going into the London Open, right? Just before the London Open, I can see the price is giving us a bullish break outside of the Asian range. So in light of this, what is the most optimal scenario to anticipate? Well, a purge reversal is the most optimal scenario because price has given a, sorry, I do apologize. No. So something I missed on, I didn't miss, but I forgot to highlight. So just in the European Open, price had already given a bearish break outside of the Asian range, right? So price had given a bearish break outside of the Asian range. So at this point, right, I'm looking at this thinking, well, this is clearly a bearish break scenario. So I'm anticipating either BRR to the upside, where a break retest reversal, or a break retest continuation. Now, where price obviously gave a bearish break and then proceeded to shift to the upside, what this now becomes is a bullish break of market structure. So it's a break of market structure. Okay. So at this point, what I'm anticipating is a bullish continuation, right, from our area of interest. So where is our area of interest? Our area of interest is going to be somewhere within this area where the breaker is. Okay. So essentially what happened, because obviously we had a bullish break of market structure and our bias is to trade as a bullish continuation, right? What we're now waiting for essentially was for price to have traded into our area of interest before the end of our session, right? So on this day, just before, so it's already 6:30 going into 7 a.m. 7 a.m. price still hadn't traded into our area of interest, right? It's only, sort of like at around later in the New York session, that's when price eventually traded back into the AOI. So therefore, there was no setup on this day, but the most optimal setup in this scenario would have been obviously a break retest continuation, because we already had that bearish break in the European session, right? Because again, if you zoom into this, right, just one thing I wanted to highlight, because this isn't as accurate as it should be, with this being the low of the range and this being the high of the range. Right, so if we zoom into this, what we can see very clearly is that this candle has already closed outside of the Asian range. The next candle also closed outside of the Asian range. So we've had 2 consecutive bearish candles closing outside of the Asian range. This is a break scenario, okay? And then obviously when this candle came back up and swiped back above the Asian range, this now became a break of market structure on the 15 minutes time frame. So that's why this is a break. So and we're trading here a break retest reversal, but in a 15 minutes variation. And then later on in the New York session, so it's 8:15 New York time, price traded into, again, our area of interest is sort of this breaker. Price traded into the breaker and then proceeded to give a bullish reversal from the breaker. right? Which is in line with a BRR scenario. Okay. So on London session on Wednesday, unfortunately, there was no setup because price didn't come back down into this area until later on in the day. Okay, so that was on Wednesday. So let's go into Thursday. So going into Thursday, we can see price has traded back up and basically taking out the high of the Asian range, taking out the high of the daily range. So we now need to obviously readjust our daily levels. So now the new high of the daily range is going to be this swing high right here. Okay. And the new low of the daily range, because price has now created a swing low, is going to be this swing low down here. Simple as that. Now, if we go into the 4-hour time frame again, so we're just going to forward play this to that one. There we go, to that 1 a.m. So H4 buy side target is going to be the swing high right there. And then the H4 sell side target is going to be this imbalance right here. So it's H4 sell side target. Okay. Right, and then if we go down to the 1-hour time frame, so I'm just going to delete this. We go down to the 1-hour time frame. Right, so it's going to forward play this. The H1 buy side target is going to be pretty much the same high as the 4-hour, so it's going to be the swing high right here. And then the H1 sell side target is going to be this imbalance. So it's quite a small imbalance, right? But this imbalance is there. So this is the H1 sell side target. Okay. So that now these levels are defined, we'll go down to the 15 minutes time frame, and we're looking to identify what kind of setup the session will produce. So we can see very clearly again, if I'm going to define my Asian range, so I don't know what this is, but the initial high of the Asian range will be right here, and the initial low will be down here, right? Or you can define it with this high instead. It's entirely up to you. But we have point A, point B, and point C, and the price keeps on trading around that range. So now going into London Open, we can see that obviously price will always track back into the range, but it takes out H1 and H4 buy side, but there is still no setup. And then finally, price obviously gives us a bearish break. So very clearly, this is a purge reversal scenario. Why is it a purge reversal scenario? Because price has traded and taken out the low of the Asian range. And now what we're interested in London Open is we're interested in trading a reversal to the upside. So obviously what we're looking for in this case is we're looking for a 1-minute confirmation to go long, right? 1-minute confirmation to go long in order to trade that reversal. So essentially, London Open, again, price was accumulating for a bit. Price gave this initial low, traded its initial high, right? And then it's like none of this is a break of structure, by the way. And then price just delivers a lower low right there. So this is your lower low, okay? And then proceeds to break above the swing high. This is what I'll call your initial break of market structure. Again, it's a bit of momentum, right? It's a bit of momentum in there, right? And then obviously after the break of market structure, we identify and see that this is a breaker. So again, our area of interest is to enter at the breaker. Stop goes 5 pips below the low. Okay. So long position at the midpoint of the breaker. Stop goes 5 pips below the low. And your first primary profit target would be the recent high right there. And then the secondary target, again, you could aim for that daily high, or you could look for alternative targets. So what I mean by alternative target is, again, something in line with the 800 EMA, or, so if we go to the 4-hour time frame, you could also seek to identify intermediate highs and intermediate lows before that daily buy-side target. But also at the same time, considering that price is predominantly bullish, right, there is nothing wrong with also aiming for that daily buy-side target. So this is the initial break of market structure, right? Price eventually came down into area of interest and then accumulated around for a bit before breaking below the low. Now, at this point, you have one of two choices. You can either choose to call it a day, or what I'll do is I would re-enter. So with this, although this break of market structure failed, price did come down after breaking below the low, and it gave another break of structure. So in this case, this is a secondary break of market structure. Now, of course, I'll take a re-entry with a secondary break of market structure, because with purge reversals, it does happen where price can at times give very sort of difficult, sorry, it does happen where price can at times fail to actually give any setups, right? What am I saying? With purge reversals, sometimes you need two opportunities to enter the trade. That's what I was trying to say. There's a secondary break of market structure right there. Okay. So again, it just ran to those levels. First entry at the imbalance, stop goes 5 pips below the low. And then profit target at the recent high, TP1 at the recent high. And then the same thing here as well. Stop goes 5 pips below the low. And then TP2 daily buy side targets. So this is the setup. Okay. Price traded into the imbalance and then accumulated for a bit before eventually, notice again, it was very, so I remember this day was very, very volatile. Let's wait for this to slow down a bit. There we go. It's very volatile. I was in this trade, price came down very close to my stop loss, but it didn't take me out, right? Again, thank God for very, very low spreads, right? So it came very close to the stop loss, but because of that 5 pip stop, I was still in the trade before eventually price gave this big shift to the upside and hit the primary profit target, right? So that was TP1 that was hit. And then later on in the day, so again, just showing you guys what happened. Price accumulated for a bit, and then in just before, in the late night session, price hit that second target. So both targets were hit on this trade. You would have needed to definitely have held this overnight if you were in Asia, whereas if you're in the UK, later in the evening, you would have seen price trade and hit that second target at the daily high. Okay, so that was the setup for Thursday. So Thursday was a purge reversal. Now let's go into Friday. All right, so Friday was a very interesting day because, of course, we'd seen price has been predominantly bullish, for pretty much the whole week. Okay, so again, the daily buy side was still the same because price hit that in the next session, and obviously daily sell side is still the same, right? Actually, no, the daily sell side was moved to this imbalance because of the close of Thursday candle. Price created that daily imbalance. So it's daily sell side targets. And then if we take a look at the 4-hour time frame, so again, just going to forward play this to just before the open of the European session, we can see that price had taken out the daily buy side target, right? So now the next step was to identify the next drawn liquidity on the 4-hour time frame. So I'm just going to put this here. I'm going to show you guys what I did. So you have to have gone quite a few days back to see that next draw on liquidity. So the next draw on liquidity on the 4-hour was going to be the swing high right here. And the next draw on sell side liquidity on the 4-hour is going to be the swing low down here. Okay. So going to get rid of this. I'm going down to the 1-hour time frame. All right, so again, just going to forward play this one more time. The next draw on buy side on the 1-hour is the swing high right here. And the next draw on sell side on the 1-hour is the swing low down here. All right, so it's the H1 sell side target. All right, so these are the key levels. We go to the 15 minutes time frame. All right, let's just get rid of all of this. Just show you guys from a fresh perspective. Right, so going into the open of the London session, what can we see? Well, we can see that price had given us a bearish break of market structure to the downside, a bearish break from the Asian range to the downside. So exactly what we saw on Thursday, and it proceeded to trade above the high of the Asian range. Now, the main thing you should notice with this case is that price gave a 15 minutes break of market structure. So this is a break of market structure yet again, and then retested. So obviously what we aim to trade with a 15 minutes break is the retest, but if that retest has already happened, and then after the retest, we see that continuation, and just before the open, price has traded into a high volume area in that continuation, then the next thing to anticipate, so I'm just going to forward play this, to back play this again. The next thing to have anticipated is the reversal, all right? So remember this, whenever price gives, and sometimes it's very easy to forget the general cycle, right? So Asian range, price accumulates, breaks above the Asian range, retests, and then continues. The next thing to anticipate is a reversal. Same thing, Asian range, bearish break, break of market structure, retest, continuation, and then we can anticipate a reversal. So with Friday, price had obviously given us that bullish break, that bearish break outside of the Asian range, and it proceeded to give a bullish break of market structure on the 15 minutes time frame, retested the 15 minutes breaker, and then gave a bullish continuation towards the H4 buy side target. So at the H4 buy side target, what we should have been looking for then is a bearish opportunity. So this came in terms of, so after price took out the H4 buy side target, price gave a break of market structure during just before the open of the London session, right? So what kind of a break of market structure was it? It was a break of market structure with an area of interest being the last of close candle, right? This is the bearish order block. So where just before the open, price had already traded sort of outside of the order block, what we could have anticipated is a retest of the order block. Stop loss goes 5 pips above the high. Right, an entry at the order block itself. Right, so in terms of targets, because this is a reversal move, the first targets would be the equal low down here. If you could get a 1 to 2, if you couldn't get a 1 to 2, then your first target should be the low of the range. All right, so TP1 is the low of the Asian range. And the second target could have been either the 800 EMA, right? Or one could have aimed for, again, because this is a reversal move, you could aim for the H4 sell side targets below. So essentially what happened, price would have triggered in at the bearish order block and then proceeded to trade towards the low of the range, hitting the first target, which is also where the H1 sell side target was. And then in the New York session, so I'm just going to show you this on the bigger time frame, just before NFP kicked in, price traded below the Asian range. And then during NFP, we saw that nice bearish continuation towards the H4 sell side target. So that completed the initial bearish cycle that was taking place. And then obviously, remember what I mentioned with the NFP, price was likely going to be bearish at the beginning and then bullish thereafter because it would create a sentiment and then act against that sentiment. So created a sentiment of bearishness, and then New York price acted against that sentiment and gave that bullish continuation back towards the high of the range, towards the next daily, towards the next draw on daily liquidity. So that's Friday setup. So Friday setup was a very nice break, retest, reversal, continuation to the H4BST, and then a reversal from the H4BST during the London Open. So that was all the setups for last week. Again, what I'm going to do is I'm going to create a flashcards of all of these setups and I'll put it in the Discord channel. But except from that, I'm wishing you all a nice Sunday ahead. And of course, I'll be seeing a lot of you in the next 10 minutes during the trading. Okay. All the best, guys. So just take a little break, grab coffee, whatever, I'm going to do the same as well. And I'll see you guys at 2 p.m.